I'm Charlotte McLeod with investingnews.com, and here today with me is Frank Holmes, CEO and CIO at US Global Investors. Thank you so much for joining me. Great to have you here again.
Oh, ho, ho, Seasons. Great to see you again, Charlotte.
Really good to be checking in with you. We've spoken a number of times throughout the year. This is our end of the year check-in, and I think it's a really good time for us to be speaking. I'm going to start with gold because we're at really an exciting time for gold. We had new all-time highs recently. It's above 2,000 as we speak. But I know in the gold sector, a lot of people have been hurt before, and I think people want to know, is this a real move in gold? So let's start there and get your thoughts on gold's price action lately.
Well, since the beginning of this century, from the last big tech blow-up in the year 2000, the bubble of Y2K, gold has outperformed the S&P 500 2-1. So gold has been a pretty significant asset class. And I was watching a program with Ken Fisher talking about why gold is bad. And, he's out of touch. And so I really think that gold is a critical asset class, like Ray Dalio has, who's the largest hedge fund in the world, that they'll have a 10% to a 15% weighting. And what's interesting is that millennials, younger people that also buy that thing called Bitcoin that some of the old gold bugs don't like, there's a higher percentage of them. They have a higher percentage than baby boomers my age owning gold. So if you looked at the wealth transfer of my age is going to shift from baby boomers to millennials to generations X, Y, and Z are going to inherit all these trillions of dollars of wealth. And they actually like gold and silver. And a lot of them say they learn about gold and silver from Bitcoin people because they always talk about the same idea that the government is going to print all this money and then they're going to turn around and want to confiscate your private assets. So they've all of a sudden discovered that Bitcoin has had this incredible run, but what about gold? And I think there's some interesting similarities, and quite often I've talked to on Twitter and I cover that I think gold, silver, and Bitcoin are important what they call it alternative asset classes, but they're decentralized. That is, they're not controlled by a central bank. One bank doesn't control them. They can maybe get short-term manipulated, but they're really important alternative asset classes in our portfolio, and you rebalance each year.
I think we're going to dig into all three of those, gold, silver, and Bitcoin, and go over some of the market dynamics that we may see in 2024. And I think they're all probably a little bit connected in some ways. If we look at gold first, and looking forward to next year, what do you think the most important drivers are going to be?
Well, last time we spoke, we talked about several things, and one of them was gold will trade higher, and it has, because I suggested that I thought rates would peak. So the rising of interest rates and the fact that some of them hit 40-year highs put a dent on gold. But if you went back, I mentioned that gold if you really were so bearish on gold, and you did the perfect inverse relationship, rates rising, gold falling, it suggested gold would fall to 1,500 or 1,400. It didn't. It actually held itself so well that now rates are starting to fall. Gold can easily go to $3,000, $4,000. So I think it's a suppressed, oppressed market that's extremely attractive. Psychologically, this is the year of the rabbit in Asia. Next year is the year of the dragon, the golden dragon. And we do know that rising GDP per capita in China or India means more gift giving, because I think the number is about 60% of gold demand is love. 40% is fear. And I've been recently writing about that. If China wants to get caught up to America in how much gold that's in Fort Knox relative to the dollar, they're going to have to buy 300% more gold than they own today to even get caught up. But they'll never be what the US dollar is because it's a two-tier system in China. People don't realize You can't use American Express. You can't use MasterCard or Visa. It's a very controlled society. You can't watch YouTube. It's really hard for people to realize. You mean you can't? No, it's not. It's a closed world. But they want to unrattle the U.S. government by making their currency the biggest, most important. But I don't see it happening. But I do see they're going to try. And for them to try to get credibility, 7 years ago, Saudi Arabia told them that they have to own more gold behind their currency. So what are we seeing? More central banks around the world buying gold to protect against currency devaluations, etc. So I think I was in Argentina last month when the new president was elected. I was there on that weekend. And what has he done this week? He's devalued the currency 54%. Now, what's interesting in Argentina, the culture, is that they don't own gold. They own U.S. dollars, and there's $250 billion stuffed in mattresses. But when you go to India, Indian women, they wear their gold, and they have 6 times the amount of gold that's in Fort Knox. So when we look at this sort of global picture, I think there's such a pent-up demand for gold. I think it's going to grow. I think when you get fear and love together moving on demand side, then gold can easily make new highs, especially with rates dropping.
Yeah, I think it's good to understand that difference there. And the other topic I wanted to follow up on with you. So we talked in our previous conversation about how we needed interest rates to come down in order to allow gold to rise. So we're starting to see that happen. What, though, happens to inflation in this scenario where we have the Fed reversing course? Because, we see inflation numbers. I think the general markets are happy with what they're seeing, but people in their everyday life can feel that prices are higher than they would want them to be. So what is your inflation outlook for 2024?
Inflation is significantly understated because they changed the algorithm that says this is what inflation is. And if you went back to the 1980 inflation algorithm, the CPI number that's populated and pushed around the world, that number would say that inflation today is 15%. So I think we have to be sensitive over, we know as citizens what the inflationary rate is. There's always sort of interesting things you have to go and look out that people are pretty smart at what they do. Recently it came out that there's record gun sales in America, but it's not on CNN. People have to go to outlets like yourself as a media platform. And it's not on mainstream, but 250,000 people are coming across the border illegally. And that's funded, a lot believe that's funded by Russia and China to destabilize America. So you will feel unsafe, then you go buy a gun. It has to do with Democrats or Republicans. They're going to have to fix the policy. But people as a self feel this way. Can you imagine if that was happening in Canada, if all of a sudden you had this huge number of 8 million people trying to come across the border into Canada? And what would that do on the healthcare system? What would that do on the education system? And so we looked for those other things that are saying, this is what is happening. I think that people are more educated, more people are using the Reddits, your network, following you on YouTube, following the articles you write, etc., and you distribute. So we're going to see that shift go on, and we're going to see a battle between mainstream media and these sort of like Bitcoin and gold or decentralized media outlets. That is something that is so key. You see in Russia and in China, there's no decentralized media outlets allowed. They're all centralized, so all controlled for the propaganda mechanism. And I think that we're going to see more gold buying. Like I said earlier, millennials are buying gold at a much stronger rate than was ever expected. And I think that we're going to see this other leg. I think the same thing with silver. What is also interesting is how they use the ETF, because what we saw in lithium wasn't so much that people came in to buy junior lithium stocks. It was all the money that flowed into U.S. lithium ETFs. And those ETFs turned around and bought all these lithium stocks that are in Canada, that are the assets maybe in Brazil and in Nevada, but Canada has the intellectual capital for raising capital for mining and development around the world. And so you see these pools of capital changing. I was talking to people this morning in London, and I believe that Sprott partnered with them for a uranium ETF equity. And they have like two of them, one big cap uranium and small cap, big cap lithium, small cap. But the money all of a sudden comes through this channel, goes into these stocks, and everyone says, well, everyone's buying all these junior mining stocks. Well, what's interesting is that a lot of them bought lithium and uranium, in particular lithium, because they bought Tesla. So we got the young investor, your age, filled with this new energy and new look at the world differently. And so you say, well, they need batteries, so let me go and look and on YouTube, and I'm going to read this article, and they turn around and go and buy one of these ETFs, and maybe some of them ventured out to buy the stocks. I think we're going to see that in the gold cycle. I think we're going to see that happen, and that's the reason why I have GoAU. But it's interesting for me is that AU is the element symbol for gold, number 79. And a lot of people, when I say wear this hat, GoAU, they don't realize it's actually go gold. Who knows it are all the science people, and I think there's this ongoing education process that younger people will go through that because they have the ability to go to websites like yourself that are decentralized media outlets.
Yeah, I think there's definitely a shift in terms of young people getting more interested in these battery metals, hopefully moving over to gold as we move forward here. So maybe we talk a little bit more about what's going on with the gold stocks, the gold ETFs. I know that investors who are watching gold rise to these historic levels are wondering, okay, so when are my gold stocks going to move? We've talked about this disconnect that we've seen throughout the year. I wonder if you see that starting to change at this point.
I think that people are going to be pretty reluctant about looking at what the exploration project is in North America to a great degree, because the regulatory world is very complex. And what Pierre Lassonde, like they used to call the life cycle of a mine, became called the Lassonde curve. And that curve used to last 8 to 9 years. 2 years exploration success, all of a sudden 3 years development, building a mine, and your production 8 to 9 years later. That's now running 20 to 30 years. So where can you compress that? And that compression happens in Africa. Where does the Robert Friedlands go? They're in the Congo. Oh, that's high risk. No, the CEO of Rio Tinto and the CEO of previous CEO of Anglo American, I was on a panel with them going back pre-COVID days, and they said their biggest setbacks and risks were actually in the U.S., where the EPA delayed them with major projects, and Greenpeace gets funded, and they make all these misinformations, and they delay the process for developing a resource. So I think we're going to take a look at the junior mining companies that are in Latin America and Africa, Mexico. These places you have a faster track where you're going to actually get the cash flow. I think what happens is that what it does is that this line, this from 9 years to 20 to 30 years, from data discovery to data production, is so long. All it's doing is shrinking the supply. If there's no exploration and going to production, but the world continues to have babies. We've gone from 6 billion to 7 billion, now 8 billion, and soon it's going to be 10 billion people. And most of that population growth is happening outside of the U.S. and Canada. You're going to see Canadian explorers have the intellectual capital to go to these other jurisdictions. So I think those assets are going to be much easier to develop in Quebec than they are in British Columbia. They're much easier to develop, they thought, in Nevada. They're much easier than, say, North Carolina. They're going to say it's much easier in Africa. So maybe we'll get another renaissance of exploration development in Africa, Canadian companies that are over there.
All right. So I said we would check in on silver as well. So let's look ahead to silver in 2024. So we have gold at or near all-time highs. Silver tends to follow gold, but it lags gold. We know that. And then it tends to outperform. So silver, I think people are still waiting to see what will happen. For you, what are we looking at in 2024 for silver?
Well, I love your book there, the big silver short I see behind you over your left shoulder. Uh, I think that silver gives you much more upside with a gold move for two reasons. One is as it's a warrant on gold. So the DNA of its volatility is always 50% more than gold on the upside and the downside. So as gold runs through and we get that golden cross, which hasn't happened, as the 50 days above the 200-day, we will see silver all of a sudden go through a new run. The U.S. continues to have a policy for renewable energy. The climate change group all met in Dubai and the United Emirates, and what you see in that is that push needs silver. You need silver for solar energy. So the industrial demand footprint is much bigger. What is really fascinating is that the cash silver market, that coin, trades at the biggest premium still. If you look at the futures market, it's the cheapest place to buy silver. But if you look at what really is going to buy a silver coin, it's much, much higher. That premium is substantially higher, basically signaling to you that the retail demand is buying silver coins. And I don't think that's going to go away. I don't think inflation is going to go away. I think they're going to drop interest rates, but they're not going to try to go below 2% unless there is a financial global crisis. But I don't think so. And what your listeners have to realize, which it was like a deja vu moment months ago, last time after we spoke, was how can the U.S. economy remain so strong? And what's come out is really that the U.S. is sending all this military equipment to Ukraine. But it's old stuff. It's old technology. It's very new for Ukraine, and it's able to show how good it is at battling and pushing back against Russia. But we're rearming everything to deal with China. And the great military industrial complex that President Eisenhower talked about is in every state. There is a military and company. And so you have to recognize as they're rebuilding the military machinery, military stocks have been growing at a 25% CAGR. They've been on a tear like semiconductors have been. Everyone focused on NVIDIA. Well, you take a look at the other semiconductors. They've had a 10-year run of 25% a year. Well, where's that going? That's going into a lot also into military and that new technology. Well, that's keeping the economy alive. That's why it hasn't fallen off a cliff and all the debt spending. So we're going to, witness that the U.S. is going to continue this big spending, and they're going to need silver, and that money is going to be as being flown. You get big tax breaks if you build solar farms, and therefore you need silver. So I think that it's very, very bullish for silver stocks.
Right. And I think this leads into a fun question that I wanted to ask you. If you look at 2024, what asset do you think is going to perform the best? It doesn't have to be a commodity. I know you've been talking about defense stocks. Sometimes we speak about what's going on with the airlines. What do you think is going to be the best performing asset?
Well, I can put on that hat for you. I've got jets too. Jets is a good barometer of global economy, and it seems to move around with the price of oil. We had the price of oil going up, and the concern of a global recession. We have predominantly foreigners from Europe and institutions leaving the JETS ETF. The retail continued because the pricing power. I follow the airlines for a big reason. It's about 9% of global GDP directly and indirectly. And because of COVID, we had this new million people that can code, and they'd rather in the winter leave Canada, leave New York State, Pennsylvania, Minnesota, and fly south, fly to Mexico, fly anywhere south. In Europe, they're all flying from Germany, going to Italy, to Sicily, to Portugal and Spain to get out of the cold weather. And they can code there. They do all the coding. You actually can do your video Zoom video from Acapulco. And it's recognizing, so the airlines adapting and adjusting for that. And so we see in the West Coast the big merger of Hawaiian Airlines and Alaska, because they want to basically have a dominant play along the Pacific Coast for business tourists. And we saw JetBlue going after Spirit to get the East Coast, everyone going down to the Caribbean islands. So it's recognizing that the airline tickets have not gone down. You're not seeing big deflation. Before, you used to be able to book 6 months out and the tickets would be cheaper. That's not happening. They're steady. And so there's big profit margins there. And I would say, to share with you, that I think the airlines are so inexpensive relative to trains and trucks that they are telling you, and they've come off their bottoms, that the economy is going to be stronger next year. It's about 6-month leading indicator. PMIs, Purchasing Manufacturers Index, I read about every month, is very, very good at showing you how the demand for copper and iron and oil will be, and it's bottomed. So oil's fallen below the 200-day, but it's basically suggesting that in 6 months from now, oil is basically going to have a bottom. But and I mentioned this last time on your program, that when you're in the third year of a presidential election cycle, and you have a Democratic president and a Republican Congress, markets go up double digits. That's just math of 60, 70 years of the 4-year presidential election cycle. When you're in the 4th year and the president is a Democrat and the Congress is a Republican, the odds are you're going to be up 90% of the chances are going to be up 8%. Well, when you have falling interest rates in a presidential election cycle, you can double that. And so that's what we're seeing now. We're going into that perfect presidential election cycle. And all these people don't like Biden. It's very difficult. The incumbent usually wins if rates are falling. And there's a big say Trump is going to win, whatever. But I myself rather look at government policies. And there's always this imbalance between their monetary and fiscal policies. And the bigger the imbalance, the better it is for gold, the better it is for silver. And now it's become the darling for the younger generations is Bitcoin and that ecosystem. But I think what we're going to see is that we're going to have a very strong economy. Now, what happens when you have a stronger economy and the stock market is going up and the price of gold is going up? Guess what happens to junior gold stocks? They go through the roof. The big cycle, 2002, 3, 4, 5, 6, 7, 8, we had a strong stock market. We had a strong gold price, strong silver price. So the biggest players, the biggest capital flows into the stocks. And I think that that's what's going to happen. The same thing with the crypto mining stocks. As you know, I'm the chair of and co-founder of Hive, that we have this idea of this Bitcoin ETF coming out. Well, that will all of a sudden usher in higher prices. But unlike gold, Bitcoin's got a model, an algorithm that every 4 years, during the year of a president election cycle, it's very interesting how that algorithm is created. It halves. So the supply actually halves. So if the world is producing 90 million ounces a year and all of a sudden it goes to 45 million, the price of gold is going up. It's going up much faster than you ever thought. So that's what's happened with Bitcoin. So the Bitcoin ETF and the halving means there's going to be less supply. And I think and interest rates are going to fall, but we're not going to get negative. We're going to get to negative real interest rates again. That all these asset classes are in a secular bull market. So I remain very, very bullish for next year.
I think that's a really good summary. I can tell what you're thinking is coming for next year, which is really useful. Any final thoughts as we wrap up that you would leave investors with?
One of the biggest things is a study was done by MIT, and that is optimism. And there's many benefits for being optimistic. You live longer, and you actually are able to capture better investments, and you're better at stock picking. A pessimist is not. Gloom and doomer is not. It's not ignoring reality, but it's being optimistic. And the biggest thing to start that off with is to be grateful. We have to be so grateful. We're so critical in North America, Canadian politics, American politics, but we have to be grateful that we're in two great nations. And on a relative basis to the world, there are all the other countries in Latin America, they all want to get into Canada. They all want to get into the U.S. We're not running the lead to go to these other countries or to Africa. They all want to come here. We have to be grateful we have a great nation. We have healthcare, we have education. We can always make things better and improve, but be grateful. It's happy holiday season time, and next year, look for the opportunities.
Okay, what a great way to wrap up this conversation. I think that's so important for people to remember. So thank you again for coming on to talk about gold, silver, Bitcoin, the markets. Really great to have you.
Thank you, Charlotte, and it's lovely being with you again.
Of course, and we will check in with you next year. So see you then. For now, I'm Charlotte McLeod with investingnews.com, and this is Frank Holmes with U.S. Global Investors. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.